When you look at what's happening now with the global financial system coming together to cut off Russia, how do you view that? Is that something that you would expect to have happened relative to really freezing Russia's central bank's assets?
Well, the two things about it. One, from a systemic perspective, and we're seeing it, Russia's not that systemic financially. It is in commodity markets, but not in the financial sector. So it's something that can be done relatively easily. But the precedent here is quite significant. This is not something I saw during my time, except in extreme cases, North Korea, Iran, but not to a G20 member. So it is a big change, and I think it does have medium-term implications.
Let me get to the question of climate finance right now.
Yeah.
Does it seem at the moment as if the priority was in the wrong place, that when we went to issues of removing finance or trying to move finance over to sustainable and renewable energies, that we forgot about the issue of global security and energy security?
Well, I think certain continents, or one continent, forgot about the issues of energy security or downplayed them in the over-reliance to Russia. I think it was obvious to some of us at the time. It's obvious to everyone now. But look, and you see in the European response to this, I think you'll see in other jurisdictions, that security and sustainability largely come together. Look, if you have American sun, American wind, American hydro, American nuclear, American storage technology, and North American energy that can provide energy security to this country, to this continent, so that mixture of low cost, low carbon, and competitive energy, that's what gives you energy security. So we're going to see an acceleration of the energy transition as a consequence of this. Yes, absolutely, there's a role for LNG, particularly gas and others, as a bridge, but it's a bridge as part of a bigger transition.
Joe Curtin has a question for you.
Along those lines, and I was going to ask it sort of the same way, Steve. I mean, climate finance and the way it's been done, I guess, in certain arenas is almost an oxymoron. It was anti-oil and gas and fossil fuel financing.
No, I disagree,
but
Joe.
if you want to do gas, even if you concede that natural gas is important, you got to drill, you got to open up lands, you got to do what's necessary to support the global energy dynamic for the next 20 years, and it has definitely been a hindrance. I've gotten a dozen tweets saying, "Do you take any responsibility for the energy crisis that we're seeing right now when you've moved it too quickly to ESG?"
A couple of things, Joe. First off, if you saw the fall off in U.S. drilling 2014, 2015, that came on the heels of an overexpansion, too much capital pouring into shale oil, shale gas, and an expansion in Saudi, particularly crude production. So let's not forget what happened and the capital discipline that came into the oil and gas industry after that. That's the big story in terms of U.S. energy production the latter half of the last decade, which is part of what's put us here. The second thing is, this is a transition. This is not about flipping a green switch. We've always been clear about this. This is a 25-year process. And whether you're developing oil, you're developing gas, you're developing conventional energy sources, it's that horizon over which you're building them out. So the two are absolutely reconcilable, and they are reconciled, and I think that's what we're going to see as part of the transition. But you can't, as part of all of that, just walk away from the big adjustment that's happening on the climate side. And so you can, look, we can walk and chew gum at the same time.
Shepard Smith here. Thanks for watching CNBC on YouTube.